What's up, everybody? Welcome back to another episode of the Chasing Cashflow podcast. This is episode number 16.
The next thing you need to learn, it, if you want to scale, is partnerships. Understanding that this is a people industry and that doing it alone, you can do it. You can do it alone, but I'm going to go and buy 5-6 properties while you buy one if you want to do it alone. That's just how it's going to work. And because I'm going to partner with people who have specialties in different aspects of closing a deal and managing and financing a deal, and you're going to have to learn all of that yourself before you can even take down one.
Welcome back to the Chasing Cashflow podcast. Thank you for tuning in. And if this is your first time listening to this podcast is all about interviewing successful real estate investors and entrepreneurs as they share how they started their business and scaled. Whether you have no properties or 100 properties, listeners can expect to learn actionable steps to grow and sustain their own real estate portfolio. If you haven't already, please make sure to leave a review on this podcast on whatever app you are listening to. It will help tremendously for the Chasing Cashflow podcast. Also, if you haven't followed us on Instagram or YouTube, please make sure to do that at Chasing Cashflow podcast, where you'll get content all about real estate investing. What's up, everybody? Welcome back. We have a great guest today. Thank you for tuning in. And it's just an amazing day to talk some real estate. So let's get right into it. Today's guest offers so much value that I think you listeners are going to, you're going to like it and you're going to take a lot of value from it. So one thing I want you to take away, though, is that this guest adds value in one particular way that makes people want to partner with him. And with that being said, he finds off-market deals. That's his bread and butter. That's what he's good at, right? But with being able to do that so well, he's able to draw in people with money so that he doesn't have to, but still get a good stake in that, a good chunk of that deal, because he's able to do the most important thing, which is finding deals. And I think it's just a testimony to, even if just starting off, you don't have to have the money. You can have other ways that you can contribute and add value to someone that has money, but maybe not time. So I just want you guys to take that away. I think that's huge. And he just has a great story. I'm super excited for you guys to listen. So with that all being said, let's go ahead and jump right in. What's up, everybody? Welcome back to the Chasing Cashflow podcast. Super excited to have Justin Wawrzyniak in today. How you doing, man?
Doing great. You nailed the last name, so excited to get started with you here, man.
First time. I only said it like 10 times before we started, so that's all right. But no, man, super excited to dive into your story. First off, let's just talk about how you got started in real estate first, and then we'll kind of go from there.
Yeah, good question. I think it's always good to understand like where people are coming from, because you've probably seen it in our industry. The backgrounds are all over the place. People are coming from everywhere. My story, the way that I navigated myself into the real estate world, was actually I was actually W-2 worker not too long ago. Actually, I think 2020, middle of 2020 was actually when I left W-2 and went into real estate. But before, if you want to take it back, like before all of this, and there's a lot of these aspects in real estate that we learn, like, power, proximity, and stuff like that. When I was just going into college, I was a deadbeat kid, to be honest. Like, I was an annoying kid where I was smart enough to kind of get some decent grades, but I was also just like always getting in trouble. And so that, I legitimately got in trouble. I had gotten in with the law one time, leaving high school, and then one time right there when I started university. And it was in that situation where I was like, all right, I got 2 of my 3 strikes are gone. Like, what are we doing here, buddy? You have so much potential, Justin. Like, why are you wasting it just messing around, doing nothing, just not focused on your future at all? And it was actually in that moment where, it was a terrible situation. I ended up overnight in jail, where that's when I was like, okay, I am going to do something great with my life. And I had committed at that point to go into engineering. My father was an engineer. His dad was an engineer. It was like, all right, I'm doing this. I'm bred for this stuff. Like, I got it. But the kicker here, and what you probably know from your real estate career, is that just committing to that is one thing. But what needed to happen was I changed my friend group completely, right? I changed the 5 people that I'm closest with, the sum of your 5, closest friends, right? I completely got rid of the party goers and stuff like that, and I replaced it with high performing engineers. And as a result, I ended up graduating top of my class, right? So there's like a perfect example of why proximity of power is important, because you go from, I went from low to like a very high achievement, and it was just simply from, surrounding myself with different people. And so then I was like, all right, sweet, I got this awesome job in the Midwest. So I moved from Florida to Indianapolis, Indiana, where I was like, all right, I'm going to change the world as this engineer. This is what I want to do. And like very similar to like when I got in trouble, like a lot of my growth happens, and you've probably seen it too, a lot of growth happens on the tail end of like a really bad situation, right? It's kind of like there's enough discomfort for you to actually change. Well, that's actually what happened with engineering, right? I got into a role that I hated. I did not like it whatsoever. Nothing against like W-2 workers in corporate America. I mean, my girlfriend gives me crap all the time. She thinks I always like talk down on them. I'm like, no. If I had a different role, I think I'd probably still be at the company. It was just, I had such a role that I hated, where they were trying to take all my time. And that time, I had just learned about real estate investing. That was kind of the side hustle I wanted to be spending time. That's what I wanted to be learning. That was the fun stuff. And because they kind of started, micromanaging all my time where I couldn't go invest, I was like, okay, we're going to have to do something different here. So that's why I ultimately left engineering W-2. It had nothing to do with like, corporate America is great and all. It's like, I'm trying to build a business with employees as well. Like, I understand that. But there was just enough for me to pivot into real estate. And so what I did was, I learned about real estate investing by being a realtor. Yourself, you're a realtor, right? And so I just worked, I niched down, right? If you want to say that. I niched down. I just worked with investors, right? Because I wanted to be an investor. So I was like, all right, I'm just going to help other investors make money. I'm going to collect money as a commission along the way. And so I did, I don't know, that first year, probably like 15 transactions, maybe like just over 4 million in sales volume as a realtor. And it was just because I focused on investors, right? It's like I just focused on what I was good at. I can't tell you what a good kitchen looks like or a nice updated bathroom. Don't ask me about those questions. But if you want to know what return on investment was, if you wanted to know projected rehab costs and stuff like that, I got you. Like, that's what I was good at. And so it wasn't until last February I was like, okay, I'm done being a realtor. I'm going to transition full-time multifamily real estate investor. And that's kind of, I joined a couple masterminds. I joined 2 masterminds, which have been incredible for my growth and scaling. The first year I did only one deal, right? One 10-unit apartment building while I was kind of building, I don't know, fundamentals, the foundation, right? And then in the last 2-3 months, I mean, I'm under contract on 3 properties right now. I just closed one last week, and we have another one that's like a very real potential here. Hopefully by the end of the week, we'll find out about that. So we went from like nothing, and then now we're this is like rocket. This is the rocket taking off, launch time stuff that we're in right now. And it's all because of kind of, that foundation was laid, those fundamentals were developed, and then the relationships were starting to build with off-market, sellers, and now we're actually starting to find some deals from them.
Wow. Yeah, no. That was a great breakdown, and we have a lot to unpack right there, because you said a lot of great things.
Yes, we do.
And yeah, and the first thing that kind of, caught my brain was, I honestly believe that like every successful entrepreneur, whether you're a real estate investor or business owner, I feel like you have a mindset shift. Like you can look back, it may not be a certain day, it may be like a period of time where you just like slowly regain, consciousness as far as, this is not where I want my life to go. I need to switch the way I think about things. And, you could debate that night in jail or those couple times you got in trouble, that kind of switched yourself as far as, I want to do something great with my life. And I love that you said that you did get rid of those people that you're hanging out with, and surrounded yourself with people that, bigger fish, if you will. And, by hanging around them, you're learning more. So why don't you just touch real quick as far as, the impact, as far as surrounding yourself with people in positions that you want to be in.
Exactly, right? I mean, you'll hear it a lot. A lot of people say it's like you want to be the dumbest one in the room, right? And that's kind of the same concept. It's like your friend group, you kind of want to be the least successful, because being around them and hearing them talk about their investments, hearing them talk about their business, it's going to elevate you to their level. And a lot of it is a lot of your high school friends or college friends and stuff were great. They're great people. But, and this, oh my goodness, family as well. Let me talk about family real quick. They are great people and they love you and they care so much about you. But the unfortunate fact about it all is normally their opinion does not matter when it comes to your success. And it sounds so harsh, but hear me out. So if I want to become an investor with 1,000 doors, right? And my aunt or uncle or my dad or brother or something has no real estate investing experience, but has heard through the grapevine of, their buddy who got burned on a deal or something like that. So now their opinion of real estate is it's a risky investment. Don't do real estate. The whole house is going to fall down. You're going to lose all your money, yada, 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 yada. That's what they have. That's their perception of real estate. And they're going to tell you to stay away from it because they care. They legitimately love you so much that they do not want you to fail. They don't want you to fail, which is they're coming from love. But if you want to succeed, you have to go, I appreciate your opinion, and don't listen to any of it. None of it. Exactly. The opinion you need to listen to is, you guessed it, the guy that owns 1,000 units that has a huge portfolio that's been investing, because they're the ones that are doing what you want to do. So that's who you need to be taking your advice from.
100%. And it's not risky, it's calculated risk. Everything that's, done. Now, their friend that might have got burned, 99% of the time, it's probably something that they could have prevented, whether it's tenant selection, whether, it's something deferred maintenance on a property. That's 99% of the time, it's going to be what they did and didn't put in proper management, whatever it may be. But I love that you said that, it's not about what they think. You have to decide, commit, and, dedicate yourself to learning real estate investing, surround yourself with great people, like you said, and, stick to it and just take action. And another thing that I've never heard something so true before is that when you commit to something and, start learning, and I'm sure you witnessed this too, you didn't have to get rid of some friends. Some friends just left you alone once you committed and were 100% into the grind of real estate investing, where you put your nose down and didn't go out to party, didn't go do anything. You were late nights working. Some of those people just went away and just didn't reach out. It just is what it is. And, it's just a crazy concept to understand as far as, just escalating yourself and getting yourself to the next level. So,
exactly.
100%.
Yeah, they kind of fall off, right? They're not there to grind as hard as you are, so they don't want to be around you because it makes them feel kind of bad about not doing too much. They fall off.
Exactly. So, getting into your first, first off, how did you even get in? Who put the thought in your mind, real estate investing? Did you read it somewhere, or did someone come to you and just say, look, you need to be doing this?
Yeah. It was actually I wanted to be I just saw it on a billboard somewhere. But in a sense, it was kind of like this happenstance situation. So when I was in engineering, so it was my final year, and we were doing a career fair. We were about to head. I had already locked in my job, but I still wanted to go to the career fair and, check out the companies. This Army recruiter came in, and you're like, oh, here we go again. He's going to try to get us to sign up, right? Dude doesn't talk about Army at all, not once. He walks in, he had just read Rich Dad, Poor Dad, and he goes up on the board, the whiteboard in front of 100 of us engineers and whatnot, and he's detailing out the cash flow quadrant, right? Like where you want to be, assets and liabilities. And I'm sitting there in the back, I'm looking around, and everyone's just bored. No one's really paying attention because they're all I'm here for an engineering job while you're talking to me about real life and investing and stuff. That's not what I'm here for. I'm here for a job. And I'm sitting looking around, I'm are you guys not paying attention? This is life-changing. This is insane. When were we taught this? We just went through 4 years of HE double hockey sticks, insane mathematics and science, and nobody taught me how to invest? Like, come on. Like, this is the stuff that's going to make me money in life. And so that was kind of like the aha moment, right? I went and I ordered Rich Dad, Poor Dad. And so I read it as I was transitioning to the Midwest for that first job out of college. And so, well, all my friends were, had just moved there. They're, buying a new car because they just got their job, right? They just got a salary. They're buying a new car, maybe leasing like a really nice downtown apartment. Well, I turned around and I took my money, I stacked my capital for a couple months, and then I purchased a house hack, right? So I went in, and that was my first taste of investing, was doing a house hack where I was 5 minutes from downtown. So I was just as close to downtown as all of them in a great neighborhood, but I got creative and I took a single family house and I converted the basement into a unit. And so I lived in the basement, right? I'm a new, like, I put my pride on the side, and I lived in the basement because I knew this was what was going to set me up for the long term, right? And so that house hack alone, I stacked so much capital. I made so much money off one investment property, and that was kind of that nest egg capital stack that I used to leave engineering and feel comfortable that I'm not going to be eating ramen noodle and, not making any of the bills. And so it was like this house hack, in a sense, is the reason why I'm a full-time real estate investor now. Like, on the tail end of that was why I was able to do what I wanted to. And, that's, I'm 27, right? In 10, 15 years, it's going to be incredible the difference that one house hack has made in my life, as far as, freedom of time, finances, financial freedom and all that stuff.
Exactly. My wife and I did a house hack on a 4-unit, and that alone was the reason why we were able to buy 2 more properties. So it's just, I highly suggest anyone getting started, house hack. Did you use so it sounded like you did some renovation to the property. Did you use like a FHA I think it's 203K, or how did you fund that?
Yeah, I did 5% down. So I didn't do an FHA loan, but there's actually, I'm sure they still have it. It's a first-time home buyer loan, and you can do as low as 5% down. It doesn't have the PMI on it, which was nice, because FHA, if you're going to put that low down, you usually have the PMI on it. And I didn't wrap the rehab into it at all. To be honest, I didn't even know you could at the time. I was just like, well, I'll upgrade it on my own dime. And so I purchased it for 5% down. So honestly, if you want the numbers, like, I can give you the full background about this deal. Like, it was an awesome deal. So
let's do it.
It was 5% down. So I think 5% down and plus renovations, I think it was like all in maybe 30,000 or something like that. Maybe, I don't know, something along there. And then every month I was making roughly $1,000 in cash flow, because I was making $100, and then technically I'm living for free. So if you count my rent of $900, where I would be spending it elsewhere, so that's calculated in the cash flow for a house hack. So I'm making $1,000 a month, and then 2 years later I sell it for $76,000 profit. So in reality, off of $30,000, I made $100,000 in 24 months, and I got to live for free, and I got to learn about investing, learn how to be a landlord. Yeah.
Wow, and you lived there for the 2 years, so you didn't have to pay capital gains, right?
Nope.
Got you. Yeah.
The kicker is I will pay capital gains. It was last year that I sold it. I am going to pay capital gains on the portion that was rented out, right? So half the house. So I'll have to pay half the capital gains, because technically I did live there. So on your personal residence, you don't have to. But because I was renting it out, my CPA was like, let's not get over. You already made $100,000. Like, let's not get too crazy with this. So I will pay capital gains on half of that project. Yeah.
Got you. Okay, so how did you find it?
Zillow direct for sale by owner, to be honest. Yep. So it's so funny, because now I'm thinking back, and it was like all of the properties that I've purchased so far have been off market. And I didn't even realize until just now that, like, that was actually an off market deal as well. That was for sale by owner. And I had a realtor at the time. We were looking really hard. We couldn't find anything. And then I also, was proactive, and then I saw this deal. I saw it had a separate entrance to the basement, and I was like, we can work with this, right? I mean, it was finished out. It had plumbing down there. It had a full bathroom, and it had had the means of putting a kitchen. And so I kind of shot it over the realtor. We worked together and we got it closed up. But it was a unique opportunity for sure.
I feel like the most profitable deals are first off found off market, and then second of all are found where you create your, let's say, cash flow. You create a situation as far as you putting in a second unit in the basement where you go and live. Maybe it's not the most ideal, but you sacrifice so you can live down there, so you can save the $1,100 or whatnot. And, that just making that work, I just feel like, first off, taught you that when you sacrifice, you earn a lot more in, knowledge, just cash in general, the depreciation on your properties, like all the benefits of real estate investing you learned about. And now you're like, okay, let's go do this again. So you were in there for 2 years and then you ended up selling the property. And then did you roll that into your next deal?
I did not, which I should have, if I'm being honest. That was also one of those. I hadn't done a 1031. I knew what it was, obviously, what a 1031, but I hadn't done one, and I wasn't even thinking, hey, I could roll these proceeds into it, right? And so I would have sold that and towards the end of last year, but we had purchased our 10-unit apartment building last summer, right? And so the ideal situation, I would have rolled the funds over. I didn't. I should have. But, moving forward, that's something that I'll do. Like the 1031 is such a great resource for us to defer those capital gains. It's like you do that and you stack it with cost segregation. The tax benefits are through the roof. And that's why, our government wants you to, the tax laws are written to encourage people to do what the government wants, right? And so that's why you see a lot of business owners and you see a lot of real estate investors tap into all these tax benefits because the government wants us to provide housing and provide jobs. And that's what we do, right? And then we get the benefits for doing that.
Exactly. No, 100%. Can you touch on real quick, because I know you mentioned it, how important do you feel, investing in yourself is? Because you said you did a couple masterminds after you quit your job and was like, hey, I'm going to go full force into this. And that's a scary thing to do. And, when your back's against the wall, typically, if you're a hard worker like yourself, you're going to push through and make it work. So how difficult was that transition? And then how would you say important it was to invest in yourself so that you could, learn the things that you learned so that you could be successful?
Yeah, I think a lot of people in the real estate industry, there's probably other industries as well, but a lot of people in real estate industry do have this kind of like self-development aspect to them as well, because they realize that, investing in yourself is a very important part of what we're doing, right? And so it the biggest things that I've done personally is when half the books that I read are self-development, and the other half is probably business, right? Real estate related. And the reason why is because you need to be able to wake up every day and be healthy and your mind right and everything to attack the day, because you're going to come across a ton of obstacles. And if you're not prepared, you're not in the right mindset to tackle them, then it's going to beat you up and it's going to be tough. So that's why I think a lot of people invest in that. And another thing is a huge thing for me was, and my family, right? I come from a family of employees like that. None of them own businesses. I have a couple cousins. I'll say that they own businesses, and I gravitate towards their I ask them a ton of questions as a result. But all of them had that employee mindset. So if you want to change your mindset to be, hey, I'm going to be an investor. I'm going to build an investment business. That is totally different mindset than if you were to go to your 9 to 5 every day. And so self-development is very important in the sense that you need to develop a new mindset around how you're going to attack the day, right? When I wake up, I am fully responsible for the income that I make for that day. I'm not being told what to do. I'm not going in and, I don't show up know when I have to show up at 9 and go home at 5 and then get home and, complain about my boss. That's what I used to do, but that's not me anymore. And there is an element of, obviously it sucks, but there's an element of that's easier because you kind of at least know what to expect. When you're waking up and you're having to oh, I just had a bad week last week, but I need to get up today early. I need to get my butt to the gym. I need to set myself up because I might have a couple phone calls that I make today that lead to deals. And I need to be ready for them. I can't be all down in the dumps if I'm trying to talk to a seller and say, I want to buy your property. It's not going to work. So that's why self-development is so important. And the stuff that I like early on, I did a lot of, Rich Dad Poor Dad, then Bigger Pockets, and then kind of like books and podcasts and stuff. And now I've shifted. I have a life coach that I meet with once a month, and then I have two different masterminds that I'm a part of. And those have been huge because there's kind of an element of self-development there. You pay to get into these networks, and these networks have like-minded people. If you have issues with your business, you ask them because they're in it with you, right? And then you also are able to meet up with them and form partnerships and ultimately scale faster than if you were to try to do this game alone. So that's what I will say about your mindset needs to change, and joining masterminds or mastermind networks has been a huge aspect of how my business has grown super fast in the last couple of months, in the last year.
I love it. Love it. Okay, let's talk real quick. Let's talk about your overall portfolio, what you got going on right now, and then talk about how your business is structured.
Perfect. Yeah. So the portfolio, right? So we purchased a 10-unit apartment, and these are all deals that I have a significant chunk in. This isn't like, I'm not like a 1% investor on these deals. Like I legitimately have at least 15% of all of these deals. Usually it's a third percent of these. So I have the 10 unit, in Indiana that we purchased right before I moved to Michigan, right? And then last week we just closed another 6 units in Indiana that we're converting to short-term rentals. So this is going to be my first experience with Airbnb short-term rentals. And the reason we're doing that is we're taking existing long-term at, they're roughly $700 a month rents, and we're going to be at $2,200 a month rent as stabilized average rents as stabilized Airbnbs. That's huge. Like that's massive. Yeah, we're going to play property management of 20% versus 8%, but we're going to be making 3x, so it doesn't matter at all, right? So we're still going to be making a ton more. So we just closed that last week. In middle of April coming up, I have 8 more units in Michigan that are closing. And then the following month, I have another 8 units that are closing in Indianapolis, right? And those are both great deals. There's another 8 unit that I'm wholesaling, but we don't need to talk about that. I just have too much going on. Like I legitimately cannot handle another deal because it is time consuming to get these across the finish line. And then we have a legitimate shot at a 16 unit here in Indiana that we're hoping to have under contract by the end of the week.
Great, man. See, you guys are crushing it right now.
Yes.
I do want to ask, so when you say we, who is that?
Yeah, we is business partners from the mastermind. So I have different partners on each of the deals. Some overlap. There's 1 or 2 that overlap on a couple of deals and stuff. But the important thing is, my value that I bring to a partnership is finding deals. That's what I'm really good at. I have my off-market direct-to-seller business for Indiana and Michigan. I'm really good at finding deals. But as a result, I don't have just like a ton of capital. So I know my value, and the value that my partners bring is capital. But sometimes, they might be on the first deal, but they don't have the capital for the next deal. And then that's why it's kind of a rotating door, if you will, of different partners. But the important thing, I will touch on partnership, and I got burned on this in our last deal, is make sure you vet your partners like almost like you're getting married to them in a sense, right? Like you need to. I highly recommend not just having like a Zoom call with them and being like, all right, he said he's got $200,000, let's invest, right? I highly recommend going to events, like meeting these people in person, lunch, or there's a ton of real estate events that a lot of people go to, and that's like a great place to kind of vet them as partners. Because in our last deal, our 6 unit, we let someone partner with us that I'd never met before. She had money and she wanted in. She does Airbnb like staging and decorating, and oh my goodness, it was a very difficult situation because, like I said, I find deals. That's my value. And I was having to explain the whole process of real estate investing. I was having to do this and that are outside of closing the deal what my focus should be. And as a result, it took me away from the deal and ultimately ended up where they weren't even a part of it. They ended up backing out as a partner last minute. So then we had to, scramble to replace them and stuff like that. And this all would have been avoided if up front I realized, hey, I understand you have money to invest, but I'm not going to take it this time. Let's get to know each other more, and maybe in the future we can invest together. And I could have gone to a different partner and stuff up front, so it would have eliminated that headache completely. So I have different partners, and I will say if you do go down that route of partnership, which you should because you'll scale way faster, right? I can't do any of these deals without them. That make sure you vet them. Make sure you get to know them, lunch, dinner, whatever it may be, in person preferably, because that's going to be important because you're with these people for 2, 3, 4, 10 years, whatever it may be, whatever that project exit strategy is.
I just want to point out, I know that was probably a stressful, situation with her, but that's one of the reasons why I love real estate is because you learn so much doing real estate than you would, reading a book. Obviously, self-education is huge, but that's probably something you'll never live down for the rest of your investing career is I'm going to vet my partner because I don't want this again. And I think that's huge. That's just one of the things I love about real estate is you got to take action if you really want to learn and the nitty-gritty stuff about real estate investing, which I think is huge. I do want to touch on, so your partners obviously are a huge role. I love that you said that you first off, described your role and described your value. And that's what makes you a huge asset. A lot of people nowadays are, just reaching out to people and saying, hey, asking questions, which is great. But, if you're not adding someone value, they may not get back to you. Or if you're not adding value to someone, they may not take you along with the deal. So I think it's, very, very important to know how to add value to someone, whether that's finding deals, the money, whatever it may be. Know your role, know your value, and provide that to someone so you can get into real estate investing. So do you have specific markets that you invest in? I know you said a couple different states. So how do you go about investing and where do you look?
Yeah. So my direct to seller business, off market deals, right, is Indiana and Michigan. And the reason why is, I lived in Indiana and now I live in Michigan. It's very simple, actually. And why this is important, and I'll touch on direct to seller a little bit here too, because it kind of factors into like where I'm investing. I want to be within driving distance or have someone on my team, a partner within driving distance of investors that I want to buy their property. And the reason why this is important, especially in off market, is because these guys are getting called all the time. And who are you different than Joe Schmo that just called them trying to buy their apartment building? What we do instead of, hey, you want to see an offer to buy your property? Which works sometimes if you time it right. Like we got lucky. Our 10 unit, we sent him a text message and it just so happened that he was like, yeah, I want to sell right now. And we're like, wow, that worked out, right? That usually doesn't happen. What we've realized and why we've had so much traction in the last 2-3 months on actually getting properties under contract is we're focusing on the relationship. And how to build that relationship is not over the phone. Like you got to get them on the phone to start. That's like step one. But then it's how can you meet them in person? Even if it's not to buy their property. So this is what it looks like, right? We have a CRM. We upload all of our leads into the CRM. And this CRM, the software is actually, I'm developing it for the public. So it should be out, relatively soon within this year, which will be a huge asset to a ton of people. But right now it's just our company that uses it, my company that uses it. And so I have a acquisition specialist that is calling all of our leads. He's calling and sending text messages, and he has literally the same super simple script. Like it's nothing crazy. But when he does get someone on the phone, his approach is, hey, I'm Mario with, Commercial Asset Solutions, my company, Cash LLC, to go with Cashflow Cowboy. But he's like, hey, Justin is an investor in your area, and he would love to get to know you. We see that you have apartments in the area and would like to meet up and find a way that maybe there's some synergies on working together. And why is this important? Now I can go have coffee or lunch with someone who owns an apartment building that I want to buy, and I can start talking to them, and they get to know me, they get to trust me, and then maybe a month or two later is when we're actually talking about, hey, do you still want to self-manage this thing? Because, we just sold a building, we got money to 1031, you ready to, like, we could buy it if you'd want. And that's how you get an offer in front of them that they legitimately will trust and accept and talk to you and give you the financials that you need to make a calculated decision on how much you can offer. It's very hard to do that on one phone call of, hey, you want to see an offer from us? Like, we're cash buyer, whatever it may be. Nothing against cash buyers, but it's like, it works a lot better in the single family space. When you get into a more sophisticated investor in the multifamily space, which we're in, we found so much traction by focusing on the relationship and then trying to get the offers out to them to purchase their property.
Yeah, you're building rapport. And I know with, like, as far as a real estate, agent, as far as what I do for a living, I know it's always like based on touches. Like, you want to get send mailers. You want to call someone. It's all about how many times you touch or call them and they see your face or they talk to you. And it's all about that. Would you say it's similar to what you're saying?
100%. That's actually where I learned kind of a lot of this. Was I was when I was a realtor, right? I told you kind of the statistics of what I did first year. Like, they were good, strong statistics. That's kind of like what a 4 to 9 year, I think I looked it up, 4 to 9 year experienced realtor did what I did in year one. And the reason why is because I picked up the phone and I was cold calling people for listings. And it was the people that I remembered to call back a couple times that actually worked out. And that's why this concept of a CRM, customer relation manager, or whatever it's called, management system, is so important for people if they want to find deals. It even works for if the brokers are the ones finding you deals, it's even good to have a CRM because it reminds you to touch base with them every month, right? So if you have like 4 or 5 realtors that you're working with to try to find you a deal, well, you're top of mind when you talk to them or go have lunch with them. But a week later, you're forgotten. I mean, you're nobody to them, right? They have all this stuff going on. So if you can have a system that tracks those people or tracks those leads and say, hey, follow up in 2 weeks, follow up in a month, and see if anything has changed. Just hitting them with those multiple touches. What is it, like 7 touches? I think it is like this.
Yep.
This concept of 7 touches. If you can keep doing that, you're just every touch you're like higher chance of actually getting this deal, higher chance of actually getting this deal. And that's what's so important, because in the direct to seller business, usually it's months before you actually are getting an offer in front of these people to sell their building, but it's you were the consistent one over that months, and they probably had 4 or 5 other people reach out to them that didn't follow up. And that's why you set yourself apart. And when they do finally get you those financials, the next step is to be ready with it. Like, know the market. That's why I don't go invest in a million markets. Hone them in, right? Indiana, Michigan, that's what I know. Know those markets, and then when you do see a deal and you see those financials, you can get them an offer within 24, 48 hours. That shows them that you're a serious buyer. And that's all you need to do. You need to be consistent, and then you need to be serious when it comes time to making that offer. And that's how we have 4 under contract right now, or almost 4 under contract right now, and we just closed one last week, all because of that.
That's awesome. So yeah, we talked about, the touches and everything like that. And that's extremely valuable, what you just said. So I want the listeners to really hone in and pay attention to that could really help them in finding deals. And the next, with that being said, how do you get those contacts to begin with? Like, as far as getting that number of the owner of the 10 unit to text him and get the deal, how do you find those, contacts so that they can go and build rapport, as we will say?
Oh, you want my secret sauce? Okay. All right. I see how it is. Yes, this is important, right? Because at the end of the day, let's say you have a lead funnel, right? And if you're putting crap in the funnel, you're getting crap out of the funnel, right? You're not going to buy anything if you're not putting good leads into it. And so it's very important that you're getting good quality leads. And the way that we do it, we're kind of refining. We're always getting better at what we're doing. What we found success is we use CoStar has been a great resource. We have access to that where we can actually get a list of the area, the area that we're interested in, maybe pencil it out by our buying criteria, and then it usually gives like a phone number or something. And at that point, we're like, all right, we'll call these. We have a higher chance of getting a hold of them. The downside is that, anyone else with CoStar access can get the exact same resource, this exact same list that we have of leads, and then we're kind of like having to figure out how to make ourselves stand out differently. There are ways that you can go to the county and ask them for a list. It's very hard, but it works out if you can get it from them because they have that information, right? They're taxing all of these buildings. They know exactly how many multifamily units are in their area, and they're taxing them, right? But it's hard for that. You get the hold of the right person in that county to get you that information and get it to you in a way that you can, property address and unit count and stuff, so you can filter it by your criteria. Usually helps. So between CoStar and the counties is kind of where we're doing that, and then we have someone skip trace those lists for phone numbers, and then I have my full-time acquisition specialist who's going through and the guy's making 300-ish call texts a day, right? He is pounding the dialer, and that's another aspect, right? A lot of people want to do direct to seller, but they don't have the time to do it, and I didn't have the time, and it was like, I didn't like I could talk to someone on the phone, but I don't like waking up and knowing I have to make 100 phone calls right now, like that. That was exhausting because as soon as I had the littlest distraction, I would go chase that because I didn't want to do the calling, right? But I learned how to do calling because it's very important. It's a very important skill to this business. And then as a result, I invested in my business by hiring on someone full time to do that. That's what he's great at. That's his specialty. He can be on the phone all day long and he gets energized. And so as a result, he's in the right seat on the bus and I'm in the right seat on the bus with, managing the leads and stuff. And as they become warmer and warmer and then eventually a hot lead, that's when I can step in and, then I'm almost like a closer. And once it's under contract, then I kind of put together the partnership as well.
I think something that's very important is, first off, these people that, if anyone does want to get started in doing direct to seller and finding deals like you do, first off, it may not even be valuable to them because of the time that they would have to put in versus going to someone like yourself and just getting, just paying a wholesale fee. And you know what I mean? And it's just going to be, more valuable, to them because they just don't have the time, like you said. And I also think that, you and your business may have an upside as far as, how to follow up. You have someone specifically, just like you said, each seat of the bus is taken and they have a specific role. And then you also, how to build rapport. You sound like a salesman just talking. So, you're good with talking with people and building relationships, which is what you need to be the closer like you are. So, at the end of the day, building a successful business, you have to have every, key part, which sounds like you guys have. So for someone just to go and, start it, obviously, it's going to take work, but it just may not be as valuable to them.
Yeah, it's funny you mention that. I sound sales. It's like my background's engineering. Like I should have no business being, and that was like kind of why I probably shifted out of the engineering world was I had this kind of this people skill set. But the funny thing is, I am so thankful for this engineering background because I kind of alluded to it earlier, right? Our CRM, we leverage a ton of technology to try to bridge some of those problems that you brought up, right? With direct to sell, it's very time consuming, remembering to follow up and stuff like that. And so that's why I almost felt like I was strategically positioned where I have a huge understanding of technology, and we leverage it in our CRM and our software tremendously in our business. And so that's when I realized by talking to other people that are trying to get started in direct to seller, where they're like, we don't even know where to start. Like, what is a CRM? Like, how do we even use it properly? Like, I'm not tech savvy, but I'm good on the phones. But you can't get on the phone if you don't know how to like properly export lead or import leads and get them skip traced and stuff like that. So as a result, I was like, okay, you're right. This is tough. I'm having success with what I got. Let me package this in a way. And so I went and I've actually spent my own money, like my dollars are being spent every week packaging this together to try to make it like a legitimate like offer, something I can offer to anyone who wants to get started in direct to seller, because it's very important to be set up for success early on so you don't get discouraged, because it's already discouraging enough as a business because you get 100 no's, before you get a yes. Like, that's how it works. So if you're already getting a bunch of no's on the phone, and then your system itself sucks, and it's like impossible to really get a hold of people or stay on top of people, that's now 1,000 no's before you get a yes. And that, like, I don't know about you, like, I have some drive and some mental fortitude, but I can't do that. Like that, I'd be down in the dumps after that. And so that's why I've spent so much time actually trying to make this something for other people, because it is to try to like bridge those issues that we have of, if you don't have a technology background, you're kind of screwed. And that's like, well, I don't want that. I want everyone to be successful.
Well, what I'll do is I'll get your website and put it in the show notes, so anyone that's interested can go check them out. Even if it's not available now, when it is available, if you keep checking, then obviously you can still follow him on Instagram as well. But it's funny that you said that, because I hired a real estate coach, because like I want to invest in myself. And, we were going back and forth, and he was like, you got to understand that every no you get is closer to a yes, and that's what's got to motivate you. And I'm like, okay, after like the 30th no, I'm like, all right, come on, man. Like, I don't know about this, but no, it's all about, like you said, consistency. So that's huge. Let's go into, so you were talking about before, we got on air here. So you have an acquisition fee, right? And that's kind of how, when you structure your business, as far as, would you call this syndicating, if you will, or would you just call this a partnership, and then just talk about your fee off of that?
Yeah, right now I haven't done any syndication deals. If we get this one that we have, we'll find out by the end of the week. That might actually be our first syndication deal that we're gonna give it a whirl at trying it out. But right now it's just been JV partnerships, right? But the reason why, if you're a deal finder, right, you need to be collecting an acquisition fee, because the amount of money that I spend on marketing and advertising to get this deal done, like every time my acquisition guy closes a deal for us, like gets a deal and we close it, I'm throwing him $500 to $1,000 of just like, thank you, right? That's on top of what I already pay him. And so there's that, and then there's so many other aspects that go into it that, a lot of times that acquisition fee is what I'm rolling into the deal as JV contribution. So, as my capital contribution as a JV partner. So it's very important that you reward yourself. Now, you can do it two ways, right? You can do an acquisition fee, right? If I find something at a huge discount, then I should be rewarded for that as finding the deal. And then as, the capital partners, they have no problem with it, right? They're getting a deal. They're getting something they can invest in, especially in this crazy market we're in right now where it's so difficult to find something. As long as they get their metrics met, they're like, yeah, that's fine. Collect your acquisition fee, right? So you can do it as an acquisition fee, or you can just do it as built-in equity and say, hey, I found the deal. I get 10% right off the bat of equity just for finding this deal. Or, a lot of times we have it structured in a way that each deal, we know roughly how much we should get, right? If you do, syndication is like usually like a 70-30 split or something around that. The limited partners get 70%, so the amount of money you bring to the table, you get 70% is factored in that equity, and the other 30% is kind of the intangibles that you bring, right? You find the deal, you raise the capital, you do the asset management, you're a KP. This is a big one in the JVs, right? You can throw someone a KP, which is a key partner that just has the track record, has the net worth. I've been doing that on a couple of my deals. I give them extra equity for doing that, because I can't close the deal without them, right? I don't have the fat bank account of 30 years of investing to put down and sign on the debt. I don't have my W-2 job anymore. I'm not really financeable in a sense besides my experience. And so these are different aspects, and deal finding is a huge one. Like if you find a deal, take a big chunk, either acquisition fee or equity, because that is your value to the partnership, to the deal, and make sure you're getting that. Because if not, you're just going to be, you're going to be kicking yourself that you did all this effort, and then someone else comes in with some money and they go, sick, I got the same equity split as this guy and he did all the work.
Yeah, I love that you point that out too, because the finding the deal, if you can find a deal, you can find the money. Like, it's not the reverse, way. It's not, oh, you find the money, you're going to find a deal. That's not the case. So your role in all this is, I mean, if you will, the most important part is finding the deal at a good discount. One of the questions I was going to ask you, which you kind of answered already, but if you want to touch on again, that'd be great. Do they care about the acquisition fee and how much it is?
No. I mean, you just have to present it in a way. Obviously, if I'm going to slap a 10% acquisition fee on something, it's got to be worth, we have to be getting at a huge discount, right, for that to make sense. Or I have to be doing something so valuable that it's going to make sense for that kind of fee, right? At the end of the day, excuse me, usually acquisition fees hover around that 3% mark. They can go up and down just depending on the deal. But that's usually what you'll see. And, investors, especially if they've been doing it a while, they expect an acquisition fee. They know it. I mean, I know people that are doing 5% acquisition fees, but they're not collecting any sort of asset management or something like that to run the deal. They just want it, they get that money up front and they can, leverage it, having the current money versus future money type stuff, or present money versus future money. But I think at the end of the day, as long as you have the story of why you're charging this acquisition fee, and usually it's, hey, I found this deal without you, with me. If you want in on the deal, then you pay the acquisition fee. And if you tell them you're the best thing you can do to, especially if you want to charge a high acquisition fee, say you're rolling into the deal. So you're not going to the closing table and walking home with money. You're going to the closing table and that's going into your contribution. You're getting equity as a result. So you're putting skin in the game. You're essentially taking your acquisition fee, converting it to skin in the game. A partner is going to be on board with that because it shows that you're committed to the deal enough to put your money into it, right?
So with your position, as finding the properties and, finding the partners, putting the deal together, if you will, how much, I'm trying to wrap my words around it. Who gets to decide, we're going to go with this property management company, or who makes the decisions? How does that work?
Yeah, usually I know, honestly, it's me. I've made a ton of, most of these deals that we're closing, it's I have the resources that we're leveraging to do these deals, right? And then you're bringing in kind of outside money who do, that's their contribution, their value. Maybe bring in someone that knows, our 10 unit, right? One of the guys was an underwriter, right? He was from out of country, but he was really good at underwriting. So we brought him in as a one-third partner. And that was his contribution, right? My contribution was I knew the area. I had all the resources. I knew how to put it together. And then our other partner also had some resources to put that, get that across the finish line. So, yeah, what I will say is property management specifically, you kind of should have an idea of who's good in the area before you have something under contract. It's tough to vet them as you have something under contract. But that kind of leads into your earlier question about what market are you invested in? If you're trying to invest in any market that has a pulse right now and you're spread thin all over the place, it's you probably don't have the team set up there. What I mean by team is, realtors or brokers or property managers or people that can do an environmental phase one, people that, insurance companies for that area, all these other little things that go in, inspectors, right? All these other things that go into you closing a deal. It's nice to have a specific market that you're working in because you can just start building those up. And usually you'll use the same property manager across all the different ones in that area, unless they, if you buy a 100-unit property and they can only do single family or small multi, you might have to switch. But outside of that, you can usually you find a good one, vet them good, and then you can use them across all the properties in that area.
Perfect, man. Perfect. No, it's been great talking to you, and I feel like you're the type of person I can talk to for probably another hour. So and just bounce ideas off each other, which I think is huge. But we're gonna work on asking the last couple questions. First off, as far as your business, where do you plan to go? What's your goal for the next couple of years as far as growing your business?
Yes. So I have a aggressive goal that I fully feel that we can commit, and I'm 27 right now. And I have, as of last week, 16 units with legitimate ownership percentages of. I am targeting 300 units by 30, right? That's my journey. I'm going on a journey of 300 units by 30. totally doable, and 50 units by the end of the year. So if we close up all the deals that I have right now, I'm like almost at 30, or I'm almost at 50. And then, if we keep this up, we could be at 100 by the end of the year, and I'm having to redo my goal of 500 by 30 or something crazy like that. But that's the goal. That's where we're headed. And as of right now, they've all been off market, so we're going to continue to invest in the business, Indiana and Michigan, just keep doing off market deals there because it's providing us a lot of value so far.
Yeah. What would you say to the first time investor getting their feet wet in real estate investing and taking the jump in? What advice would you give them as far as, which direction to go in real estate investing? Obviously mine's house hacking.
I was going to say, you and I
okay.
Both, right? First investment property, if you want to learn it, do a house hack. What I'll say after that for a new or getting into real estate or making the transition to like more real estate, right? You might have a property or something. The next thing you need to learn, you need to learn it, if you want to scale, is partnerships. Understanding that this is a people industry and that doing it alone, you can do it. You can do it alone, but I'm going to go and buy 5-6 properties while you buy one if you want to do it alone. That's just how it's going to work. And because I'm going to partner with people who have specialties in different aspects of closing a deal and managing and financing a deal, and you're going to have to learn all of that yourself before you can even take down one. That's why I'm going to be able to run circles around you. So what I will say is house hack, awesome strategy to begin with. If you want to be more passive than a house hack, I will say another good one is be an LP, right? Be a limited partner on, like a 100 unit or 200 unit apartment deal with an operator that you know and trust, because then you kind of give them money under the assumption of, hey, I want to be asking you a ton of questions. So you can get a return on your investment, right? You might be getting 8 to 10% return on your money, but you also have access now to ask a bunch of questions and learn the process. So that's another way to learn quickly, is either house hack if you want to be more active, or if you want to be super passive, be an LP. And then regardless, if you're in the real estate world and you want to scale, you got to learn that it's a partnerships and a people industry, and you got to build those and join networks of different people, because that's what's going to set you apart from everyone else.
Yeah, I think another important part is, when you do go in with, well, first off, like exactly what you just said, when, you're doing this by yourself, it's probably going to take a while before you can start, leveraging your real estate to buy more and more and get to that level. But also, I feel like, when you have partners, you have people that are the best at what they do, on your team. So instead of doing everything and dreading some things that you'd have to do, tenant relations, if you're managing yourself, instead of doing that, have someone in place so that you can, you can do the things that you enjoy, have it more automated, and you're doing more. So
it's so important. And if things aren't going great, it's not just you freaking out. It's like you got this, like it's all of you like working together for a solution or something like that. Like you're all going through it together. And that is so important. Like you mentioned, the mindset side of things. It's like if you're doing it alone, you have no one to ask questions to and stuff like that. It's scary. It's a scary thing to do when you start writing, sending wires for $100,000, $200,000. It's like that ain't fun to do unless you have some people around you that you're confident around it. So that's another aspect of partnering up. Everybody goes through the crap together.
Exactly. Yeah. It's not every day that you're sending $100,000 wire. So, no, but next question is, what is your why? Why are you doing all this?
Yeah. So my why actually has changed in the last couple of years, but a great example of, and probably this is the best way that I can explain my why is, so last week I went down to Indianapolis where my grandmother lives, right? And that's where I have investment properties. That's where I lived for 3 years. And so, when I was a W-2 worker, I never had any time off. I was always working. And thankfully I lived close to her, so I was able to spend some time with her. But it was never when I really wanted to. It was kind of like whenever it was free with the work going on, and I might be able to sneak out for a weekend or something like that to see her. Now what's changed and what is now my driving force of my why is, so she just had health issues, right? So she just had a stroke, which is horrible. And then we were all freaking out. She
that.
goes to the hospital, and then she had another stroke. So now I'm sitting there up in Michigan. I'm freaking out. Like, this is my grandmother type situation. And so when I was in W2, like, timing, it would have been like maybe I could have a couple days off to go see her, but then I'd have to be back at work. Now I was able to spend the last week and a half down there, legitimately 5 to 6 hours a day by her bed, hanging out with her. She remembers me here and there. Like, it's tough. She went through a stroke. Like, it's sad, but that's my why, right? I now have this freedom of time. Time is the most important asset that we have. And so I'm able to just say, screw it to my business and go down there and stay with her for a week and a half every day, being around her, because that's what's important right now. And that is my why. That freedom of time. Yeah, financial freedom is another aspect, but it comes when I have complete control of how I want to spend my time. And that's why real estate does that. The passive income side of real estate does that for us, because if we don't have to worry about working to make money and it's coming in passively, I can go spend my time doing what I want. And last week that was with her, being with her as she's recovering and trying to get more of her memory back and stuff like that.
That's powerful. And, time freedom is amazing. And, the fact that you're at it at 27 is insane. So, I'm glad that you're able to do that. Last question. Why are you the Cashflow Cowboy?
Because it's catchy, if you're being honest. I actually read a book called The Introvert's Guide to Networking. And I'm not, like you probably know at this point, I'm not really an introvert, but it was a very interesting book. I listened to a podcast where the author was talking, and I was like, all right, well, I'll check it out and stuff like that. And part of it is find like your niche, and then it's like this code name of like who you are, right? You want to be able to introduce yourself as something kind of out of the normal where it gets people to like ask you who you are. And for me, it's like Cashflow Cowboy, right? We were kind of messing around on Instagram at first with Cashflow Cowboy, and now it's stuck. Right now I'm like, all right, this is my brand. And it's important because it, obviously it relates to real estate, but what the important side of it that I've realized is it allows me to connect with more people, younger, our generation type people. And why this is important is because we need people to know about real estate investing, right? Like, we found it. We know how awesome it is. But the issue is, when I was in engineering, like, no one really, there was like maybe one or two other people there that were doing anything real estate investment wise. Everyone else was like grind, a 401k type stuff. And so by me putting on this cowboy hat, Cashflow Cowboy stuff, it allows me to connect with that kind of audience just long enough to grab your attention for you to hear maybe a fraction of what I'm telling you. And if I keep doing those touches over and over, maybe eventually you'll be like, all right, I got to reach out to Justin on Instagram and figure out, what is he talking about? How do I do this? How do I get into this? How do I start investing? And that's, as far as my why, it's like freedom of time. And it's, it's like, how can I help people, especially our generation, like, get into it?
Exactly. For those of you not watching on YouTube, he has a cowboy hat, and it's been sitting right next to him this whole time, which is awesome. And one thing to just like piggyback on that is, I started my real estate as a real estate agent, and I wanted to stick out. I'm 6'9", so I kind of stick out already.
Yeah.
But I started giving all my clients and spreading the word, the real estate giant. So now I'll see people in the grocery store, past clients or something, and they're just like, "Oh, real estate giant, how you doing?"
Yep.
And it works. It really does, and it gets people's attention. And they're like, "Wait, who's the real estate giant? What is that?" So it does help. I 100% agree with you. Is that is a great marketing tactic as far as getting people out there, and it's fun. It's just a fun thing to incorporate.
Yes, I love my job, right? That's where I'm at. I used to hate it, now I love it.
Yeah. Exactly. So where can the listeners find you, social media, where can they find you?
Yeah, the best way, legitimately, the way you're going to have the most fun with me, Cashflow Cowboy on Instagram, right? I also very active on Facebook, a little bit on LinkedIn for kind of more professional posts, if you will. My website is down right now, so maybe by the time this airs or whatever in the next few months, in a few weeks, it should be up and running. If you want to check that out, www.cashcre.com, Cash CRE, and Cash stands for my business, which is Commercial Asset Solutions and Holdings. So it's all on brand. Cashflow Cowboy, and then my company's Cash. Like, you just got to lean into that kind of branding stuff.
No, that's great, man. And yeah, I'm going to put all those links to his social media where you can find him. Please go and check out his Instagram. It's awesome. He's always got a cowboy hat on. And yeah, I'll link the website as well. And everyone can go out, check it out, and maybe the CRM will be out by that time.
Exactly. Yeah. If you just keep follow me on Instagram, and then that CRM will be dropping here in the next weeks or months. And if you want to be a part of that, reach out to me. That's the best way to do it.
Perfect. Well, Justin, thank you so much for being on. I know I learned a lot, and man, I'm super excited to follow your journey on Instagram and see you get to those 300 units.
Appreciate it, Evan. It's been a blast.